solutions that work for her and Sam, that we can then, measure it. I mean, this waste management ecosystem in India, for instance, just focusing on India with 1.3 billion people, 2/3 of the waste is not being treated and managed, but the solution is in the small entrepreneurs. And
I think we all agree, and I think one of the challenges, and it's going to be a challenge for the philanthropic organizations, is to try to figure out how to use this particular technology to help solve that problem. Because we have seen, and again, I think M-Pesa is just a fabulous example of, actually, most of the highly disadvantaged population in Kenya have access and have it through M-Pesa.
Yeah, and it's growing.
Okay, it's changed the way they behave. It changes their transactions. It changes their savings. It changes their it changes everything.
Access to markets.
Yeah. Right. So I just think we working on this, whether we're policymakers or companies or philanthropies, have to ask ourselves, what's the role of this particular technology? Think of blockchain as a particular technology. A really great thing that happened this week was the MasterCard Center for Inclusive Growth and the Rockefeller Foundation introduced a significant new grant funding mechanism. It's really meant to help measure and therefore encourage private investment and philanthropic investment in impact in SDGs. And they are going to look carefully at how can we deploy blockchain in that.
Yeah. Can I just add to that? So there is no shortage of money. The USAID, the global funds, the bilateral donors have been putting billions and billions and billions of dollars towards aid. And what they are saying is, we need new solutions, right? The aid money is going to run out. And so I think there is a really interesting role for the private philanthropist on this issue to, invest small amounts of philanthropic capital to test out these ideas so that then we can take the solutions to the traditional donors, but also help make this a sustainable solution that won't need aid. It will replace the need for aid. And so I feel like, with Maverick Collective, we have donors, individual donors coming to us all the time saying, tell us what we can invest in for great impact. And so I think there is a real opportunity there to work with this private capital, great minds, great technologists, to implement this on the ground and prove the concept.
If I may jump on what you just said. Yeah. So I used to trade the SSA bonds at JP Morgan. I used to trade the EBRD bonds.
Oh, wow.
I know exactly how these bonds are structured, where the proceed goes, and where the errors are made.
Okay.
Now I'm building an ecosystem that supposedly and hopefully will replace capital markets in 15 years. Now I'm going to lead with a question to the public and ask you, who of you have read Isaac Asimov Foundation Cycle? More of you should read it because it's very, very relevant at the moment.
What is it?
Foundation Cycle.
Foundation Cycle.
Yeah. And I'll tell you why it's relevant, because we're talking about disruptions. Everyone here talks about AI, talks about decentralization, but we're forgetting a very, very important component, and it's collective intelligence and community. And I will tell you why. What I've learned through ICOs is that there is a real community of people that are helping one another, that want to help one another, and that are leveraging on the knowledge, on the experience of each other's to make better decisions. So why is that important? It is important because the end goal of a society is to reach a state of equilibrium. However, equilibrium means wealth and peace. But to reach a stage of wealth and peace, we need more and more money, right? Now, the current form of capitalism that we have is skewed and is wrong because money begets money, meaning that people who have more money can get a loan from a bank much easier than people who have less money or have no money. It goes back, same thing with companies. Companies who have money can issue more debt or can IPO easier. And same thing with countries. Countries with more money can issue more debt and leverage on this. Now, the issue with poverty is that poverty creates social tensions, and these social tensions create social instabilities, and these social instabilities create revolutions and create wars. And this is very, very important for SMEs, especially in emerging and frontier markets. But the very interesting thing that we're facing nowadays is that it's not only emerging and frontier markets that are having social instabilities. It's developed markets that are having social instabilities. And one of the reasons is probably the fact that we never really recovered from the financial crisis of 2008. My parents were richer than I am today, right? And add to this social media, when you see people flaunting their wealth with their helicopters, when you see some students that have tons of students that can't find a job, it creates anger and angst. And this has been translated Trumpism in the US, Brexit in the UK, Gilets jaunes in France. So how can we resolve this now? To resolve this, we need to empower entrepreneurs with smart money.
Yeah.
And this is where I have a big critic towards what the EBRD, IBRD, IFC have been doing, is that the money they've been investing is stupid money. It is stupid money. Why?
I disagree.
Yeah, I think, yeah,
I will tell you.
calling names.
I will tell you. The percentage of projects that are successful, and you will tell me, how many projects are successful 5 years in?
I can tell you. I'm in charge of methodology of measuring impact.
Yes.
And on average, we deliver higher exposed impact than we thought ex ante. Not much higher, pretty much the same. But percentage of projects which outperform in terms of impact is the same as percentage of projects that underperform.
Okay.
So on average, we deliver what we promise our shareholders. And we have a very robust methodology of measuring expected impact ex ante and measuring it every year, checking which benchmarks are met, which benchmarks have been not successful. And so take it very seriously. And here, I fully agree with Laura. Whenever we talk to impact investors, they say, if we want to invest with you, we want to understand what the impact is. And that's the problem which can be addressed by blockchain, helping to measure impact. That's why I talked about green bonds, for example.
Yeah, that was a great example.
Greenwashing
That
is
was
a
a great
big
example.
problem. You mentioned the bonds, right? And the waste management. You come to recycling plant and you say, this is legal, and this is where blockchain can check whether it's legal or illegal waste management, right? And this is extremely important, because then once you have robust certification, verification methodology in place, you can bring in private money.
Yeah.
One number which I wanted to mention is, what is the amount of impact investors' assets under management today? Talking about billions or trillions agenda. Unfortunately, we are talking about something like $200 or $300 billion assets under management.
Assets.
So we are still in the early days, not near what we want to be when we talk about delivery on SDGs.
But do you know what the failure rate? That's what I'm interested in. If you tell me what is the failure rate of the companies that the EBRD, IFC, IBRD have invested in, the failure rate is higher than 50%.
So
What's the source?
That's business.
No.
Yeah, we invest in
But-
small companies.
Hold on.
Yeah.
I agree, but
Only
we can do
40%.
it better, and I will tell you
Yeah.
how we can do it.
Okay.
So we've been talking about decentralization.
We are a risk-taking organization, right? I think it's very important. There are some other institutions. You mentioned IBRD. IBRD is actually very different from
Yeah, they don't take
IFC and IBRD.
No.
So there are some institutions which don't take risks.
Right.
We have much higher risk appetite, and we are proud of this because we can co-invest with venture capital. We can co-invest with private equity, and we can take risk, and therefore we are prepared to fail. And we do fail. In some countries, we make major losses, but our portfolio is diversified. So overall, we deliver both on financial and on impact.
Well, let's hear what.
Yeah,
how do you
let
say
us
we'll
solve- let
improve?
us solve.
Yeah.
So we are building something that we call smart money investment.
Okay.
Okay.
So smart money investment means that if you're a company, if you're an SME in emerging market or an SME in Italy or in Spain, you come to the ecosystem. The ecosystem will rate you automatically because it has like a machine learning AI system.
It's using all data about you.
It's using all the data that it can find.
So that's what
about you,
PayPal does in the
about
US.
the industry,
That's
about the people that are working with you,
Mhm.
about your financial,
Everything,
etc.
everything they can
And
find. Yes.
it comes up with a score. But this is not the important
Right.
part.
Okay.
The important part, and the part that I believe is really going to make a difference, is once you are on the ecosystem,
Mhm.
the community gets involved.
Yeah.
So the community starts doing exactly like the pools in Telegram, right? Community starts speaking to you. The community start asking you questions. The community start looking at your project and telling you, well, I don't know, you want to open an ice cream factory
Okay.
in Portugal. I am an ice cream factory in Italy. You want to buy this machine? Bad idea.
Yes.
You better buy this machine, etc., etc.
Fair
So it is this exchange of
Sure,
knowledge
that makes sense.
that leads to a project
Yeah.
which will be agreed on by the investors and by the company and will lead to a vote. So you will have the
A vote.
investors that will need to vote
Okay.
and decide on whether to issue a bond, to issue equity, or not to issue anything at all if they don't like the
How do you
project.
prevent fake information on your platform?
That would be, yes, blockchain would be very good there.
That'll be
You
another
cannot, you
question.
cannot have fake information because the AI system looks at everything on the internet, number one. For the SMEs, we will have people in place to check the correctness, the truth of the papers that they have. Because this is a
Peer
problem
review based.
with the blockchain, especially when we talk about real assets, is that is it real at the beginning, right? Is it real at the beginning?
Peer review.
And this is why we speak with people like you, because you already have the teams on the ground that can do this third-party check and tell us, yes, these financials are correct, or no, these financials are not correct. But now when we get to the voting part, and this is where it's very, very interesting, is that your vote will not be equivalent to my vote. Why? Because you're a legal specialist. Let's say I'm an ice cream specialist. My vote is going to have a higher value than your vote because I know this business better than you, right? But it's not only that. My weight on the platform is going to evolve through time
Understand.
based
Liquid
on,
democracy.
sorry,
Yeah.
collective
Liquid
intelligence.
democracy, I haven't heard that term.
Yeah.
That's
So,
good.
we have a final panel to discuss how to bring into reality this decentralized financial system. I will give you the award. So how to manage this financial system. So we should kind of speed up. What are your thoughts,
Thank you very much.
Jonathan?
Thank you. So maybe we have a microphone or yeah. Thank you.
Yeah.
Hi everyone. I think first of all, the great things we had today is a real, like dialogue, and dialogue means, to have different point of view. If we want, to make blockchain industry something that will be sustainable, we need as well to engage in discussion with people that have experience and don't think like us. We have to remember a simple fact for people that know and like a little bit history like I do. It's all the major breakthrough for humanity have always had great reluctancy by the established order. So if we will not had, like the daring and the passion and the dreams, we will never, be flying, not to the moon, not to the space, not underwater. And so if we are here with those technologies surrounding us, it's because some people have been risk taker, believer in humanity and in its ability as well of adopting those technologies or those changes. So that's the first statement. The second statement is we are very lucky. There is hope. Why? Because 193 nations have agreed on an agenda which is not a short-term agenda, which is, plaguing all our, like current economy, on a long-term agenda, 2030 objectives, 17 goals, the SDGs. Those goals are there, like a roadmap for all of us to build projects and innovations and to build up PPP, public-private partnerships. We cannot do it alone, but if we work together, we are capable to find and build the solutions of tomorrow. So now let's go concrete. How can we solve the problem of inclusion? Because that's basically what is at stake. How can we bring, the aspect of inclusion for the millions of people that have their dreams, but that are lacking, like banking account or funding? There is, like lots of things to achieve. They have great ideas, but how can we identify them? So I come from finance. I've been working, and I'm happy to know that there are some ex-colleagues, from JP Morgan. I worked as well at Bank of China, at Julius Baer. I learned so much from them, But I learned as well that in 2008, 2009, we are capable as well to really put ourselves to the knee because of speculation. So the speculation that we are, putting forward for blockchain and cryptocurrency, well, I can tell you we have the same current speculation with a much more sizable aspect for, the current financial market. So that's, a given for all the aspect of innovation. There is speculation, but how can we transform the energy from speculation to real investment? And that's where we need, the purpose. So what I built a social network for social good. Why? Because the people of our generation, your generation, they are exchanging daily their informations. So we need to interact with them and give them a way for them to share about what they feel and how they connect and resonate with the SDGs. What are their projects? What are their positive actions? All of this is capable to embrace everyone. Everyone has a cause that is dear to our heart. So the first thing is we have to facilitate the connectivity on social media, but for good, for something meaningful. So we have already 300,000 members in 180 countries, and that has been developed organically by going on the ground, meeting the people that wants to make the world better. But when we meet them, they have great ideas, but they are lacking the funds. The funds doesn't channel to them. So how can we bring the dimension of impact? And that's where blockchain is a miracle. Let's call it like this. I created first a digital currency, but that digital currency was not crypto. It was not decentralized. It was purely on the network. It don't work. It cannot work. Why? Because we need the traceability and the decentralization. So I learned from that by meeting, so many, people that are what we call the Forbes, 500, and they will slap me, in my shoulder and say, that's a great project, but they didn't move. Why? Because we have a problem in the aspect of giving. Many reasons for that. Some people say, I don't want to give because, I cannot trust, I cannot have the traceability, I cannot measure the impact, I need to do proper due diligence, all those things. So hundreds of reasons not to give. The first thing is we really own what we give because no one can take it back from us. That's the first, principle, philosophical principle that is, the driving of everything that has been built in the Renaissance and in many, a period of human history that was, on the Enlightenment aspect. So we develop a cryptocurrency, a utility token, which is called OU token. That token is very simple. On every transaction, there is a small percentage, we call it proof of impact, like a VAT, from 0.01% to 0.1%. On every transaction on the blockchain, on Ethereum, that percentage goes to the cause that you want to support. It goes to a foundation in Switzerland, and that foundation gives it back 100% to the most active users of our social network that are plebiscited by a worldwide community of social good doers. And on all of them, we ask them only few information. One of them is, which of the SDG do you feel the most connected? So imagine a world where we build social network not to extract from you data to sell it when you don't know. But imagine a world where we have social networks that connect for good and that are capable to support the people that are the change makers of tomorrow, that are making the change, and that are plebiscited by us, the people. And that's where it gets, to a new dimension. Because if we have on the billions of transactions that happen every day, a very tiny percentage that can flow to the people that are the breakthrough, the thinkers, the dreamers, those people have the solutions on their local, places, geographies. And those people want to embrace a world where they have a ownership for them and for generations to come. So let's be hopeful. Let's build those partnerships. Let's consider blockchain as a real breakthrough technology, as it was said, like for net. But we have to bring the dimension of purpose. We have to bring the dimension of solving issues. And if we work all together, yes, we can live a moment where a world can be more harmonious and sustainable. Thank you.
Thank you. Thank you. I invite the next panel, and let's make a joint photo. Please stand up for joint photo. And the next panel, please come in. Thank you. Thank you. Very great. Thank you. So the next panel is very practical. Please come in, take your seats. We will discuss how to manage this new financial system. So it's a practical question, how it shall be managed, how to manage supply to match demand. Okay, guys, please take your seats. Okay, please keep your seats. We will have reception just in 35 minutes or so. So there will be a lot of time to talk. Yeah, thank you. Okay, yeah, thank you. Thank you. Yes, please take your seats. Take your seats. Very important panel. How to bring this to reality, how to govern this. Okay. Okay, please take your seats. Okay. Yeah. Okay. There will be a lot of time on our reception to talk to each other. Now we are starting this round table. The board and monetary policy for decentralized currency. So who will decide how much money to print and where this money to send? We started this day with Nouriel's idea that central bank can print money directly to millions of accounts and decide which of these accounts will receive this money. Is there an alternative? All right. So could you kindly help me to start this? Could you kindly help me to start this? Okay. All right. So guys, how this monetary policy for decentralized currency shall work? So imagine the smart contract which can print tokens, and this should be managed somehow, probably. It could be potentially managed automatically by the smart contract itself. However, it should take some time to understand how this smart contract should decide when to print money. So, and probably before that, there should be some board of governance to discuss the traction, to discuss the demand for the currency, and then unlock some of the currency. Who wants to start?
We're still missing a panel.
Yeah, it's loud a bit. Guys, please kind of count down. We will have a separate reception for discussion. You can move to the lobby of the hotel. We are still in serious mode.
Do you have a...
Okay, and we try to make it louder. Could you please make it louder? Microphones. Okay, let's start, and then people will join us. Who wants to start?
I mean, I can... I'm happy to start.
Kirill, could you make it louder, please? Microphone.
People are listening.
Okay, try.
Maybe I'll put it right up in my mouth. Okay, so I guess first of all, introductions. My name is Stephen Murchison. I'm advisor to the Governor of the Bank of Canada. And for those of you who don't know, the Bank of Canada is Canada's central bank. So we've been talking a lot about central banks this afternoon. And I'm also chair of the Financial Innovation Network of the Financial Stability Board. So the question, I guess there are a few questions. So this is the board and monetary policy for a decentralized currency. how should a global central bank and monetary policy be designed and governed? So I guess my first reaction was, before you start talking about the how, you would want to spend some time thinking about the why. Why would this be a desirable setup? And some of that has already been discussed earlier this afternoon. But I think the way I sort of approach a problem like this is, I think there are very good reasons why individual countries or blocks of countries, in the case of the euro area, maintain sovereign currencies and therefore sovereign monetary policies. And I think the main rationale for that, I mean, I think there's a sort of a sovereign nationalistic aspect to it, but I think more concretely, the main rationale is that different countries respond differently to different economic developments. So for instance, movements in oil prices, a rise in oil prices is beneficial for some countries and pushes inflation in one direction, and has the opposite effect for other countries, depending on whether you're a net importer or a net exporter of oil. So that's an example of where it's highly beneficial to have a sovereign, independent monetary policy. So any system that's contemplating moving to a highly centralized global system, whether it be on a blockchain, or whether it be a sort of a traditional central bank, I think what we're really talking about here is like a single global currency, and therefore a single monetary policy. And I think that in a setup like that, you're going to lose that ability to respond to shocks in the appropriate way that's appropriate for your particular jurisdiction. So I guess, I mean, right off the bat, I think that's a pretty compelling reason to think very, very carefully before moving in the direction of a more centralized or more global currency. I think that we've seen with countries that fix their exchange rates, we've seen what can happen when countries do that, where the country that's fixing is affected by shocks differently than the country to which they're fixing to, and you can get all sorts of perverse outcomes. And so I think that the idea of individual countries or blocks pursuing price stability for their own jurisdiction is probably the best way to go. That's the first point. I think just as a more practical matter, and again, this is revisiting some of the points that have been made earlier on. When we talk about, if we're talking about a cryptocurrency as this sort of global currency, so sort of getting rid of sovereign currencies and moving to sort of a global blockchain-based cryptocurrency, I think that nobody can obviously can predict the future, but I guess I look at it from the vantage point of what I observe right now, and I would argue, and I should have prefaced all of this by saying these are my own views and not the views of the Bank of Canada or the FSB, but my own view is that what we've observed to date is that cryptocurrencies being traded and operating in mainly advanced economies where they have credible, independent monetary policy frameworks with price stability as the main objective of monetary policy, I don't think that you can consider cryptocurrencies money at this point in time. And it really goes back to the, Nouriel laid it out much more dynamically than I could, but there are these sort of three roles of money, and the stable store of value, the unit of account, and the means of payment. And I think right now, what we're observing is a little bit of a catch-22 situation, in the sense that there's reluctance to accept it on the part of merchants because of the price volatility and because it is not an established unit of account. So if I'm a merchant who's accepting cryptocurrency, what I care about is ultimately how much I'm going to get in US dollars or Canadian dollars or UK pounds. What people ultimately care about when they're taking receipt of this Bitcoin is what they're going to be able to purchase with it. And that is still, the unit of account is still sovereign currencies. So as a result of that, this price volatility matters a great deal. I mean, I think if cryptocurrencies became established as more of a unit of account, then these wild movements in Bitcoin vis-a-vis sovereign currencies obviously wouldn't matter as much, and you would probably have less of that volatility. But I think right now we're sort of in a catch-22 because you've got these scalability issues, because you've got price volatility. Now that's not to say, I mean, I don't take what I consider to be sort of the extreme view that Nouriel has taken, that you would want to sort of rule this out as well. If we can't do it perfectly right now, then we should just forget the whole idea, because we'll never be able to do it in the future. I mean, I think there are, and I think some of the other panelists are gonna talk about some promising areas of future work that are aimed at reducing that price volatility, which in turn could help it to serve, in principle, more as a means of payment, and therefore potentially with as a store of value. My point is that I don't think we're there yet. Last point I'll just make very quickly. I think that the way that central bank digital currency has been characterized this afternoon is one of a possible set of options. And I think what has been discussed, which is basically, you move all consumer deposits onto the central bank's balance sheet via an account system. And so you in fact completely disintermediate the deposit taking credit creation component of private banks. I think that's an extreme view of what CBDC could be. And there are certainly much more middle of the road sort of approaches that I think central banks are currently investigating. So one option is, rather than having an account-based system where essentially anyone in the public who wants to have an account at the central bank does, instead you have more of a tokenized system whereby, much like cash currently gets distributed through the banking system, you would have CBDC distributed through the banking system. So in effect, a private bank could simply demand more settlement balances, which people could then, and that is central bank money. People would then have the option of, say, using an app to move money from their demand deposit into central bank currency, and it would be held locally on your smartphone or on a card or some sort of technology like that. And certainly there could be a role for the private sector in terms of developing the interface that allows, through an API, that allows people to make that transfer from their demand deposit to central bank money. The key point is that once it's on your phone, it becomes central bank money. Private banks no longer have access to it to loan it out. It is no longer considered inside money. And I think that's a much less sort of disruptive sort of intermediate between the sort of two extremes of the status quo and the sort of full Monty CBDC that Nouriel took us through, that would be much less disruptive and would have much lower risks of sort of disintermediating private banks and moving the whole sort of role of keeping track of accounts, KYC, credit creation, and moving that all to the central bank. So I think there are solutions that sort of exist in the middle. And I'll stop there.
Okay, my name is Ansgar Behlke. I'm a Jean Monnet professor for macroeconomics at the University of Essen. At the same time, research associate at the Center for European Policy Studies, where I also took part in the monetary experts panel in the European Parliament and could observe all the difficulties the ECB had in coping with too low inflation, Negative interest rates could not be implemented. QE was ineffective, as we argue, also for the US in terms of lowering long-term rates. So in my mind, I think the question, at least, how should a global central bank be designed, is a kind of misleading. I grew up with Robert Mundell, 1999 Nobel lecture on, more or less, it's time for the mundo, the global currency, because all inflation rates have converged. They have not, as we see. So what I miss a bit also in the cryptocurrency debate, focus on optimum currency areas. So my ideal view would be a three-polar world with three optimal, more or less optimal currency regions. And within that, maybe a competition among cryptocurrencies and official monetary policies. And as we heard this morning and yesterday as well, the central banks are in a stronger position, but still, if central banks do not deliver stability, this might be a chance for crypto currencies, at least for countries with weak institutions. So let me just elaborate a bit on the second question on how currency supply could be regulated. Maybe later on deal with a roadmap for the stable currency. So what is obvious is that high volatility is explained by the lack of trading pairs, which we have. So many of the cryptocurrencies have low trading volumes, strong volatility of demand, and much of it is driven by the underlying blockchain technology, the fiat to crypto exchange rate volatility. So the pegging also of the cryptocurrencies to Bitcoin is another source of the volatility, which we have to deal with. But if you now go for a higher number of fiat to crypto trading pairs, and if this is gradually increasing, there might be a desynchronization in the development of the values of cryptocurrencies, and the hedging function might be completed. And this is what I would like to argue, that this kind of cryptocurrency investments would serve as a hedge for other investment risks and play a productive role in overall risk management. So in principle, they provide an opportunity to diversify and to hedge against movements in other currencies and asset markets. But if the cryptocurrencies' values become more stable with respect to some traditional currencies, I would like to argue that this would lead to a closer match with the respective traditional currencies, so the decrease in its usefulness. So they become more or less similar also to the currencies. There might be also the possibility to improve the supply protocols. I'm not an expert in that, to limit the volatility of the currency values. More responsive to demand conditions. This might be a way out. And we heard already several times of the stable coins, the creators of the new currency called Basis, and there were other representatives around arguing that it's rather simple to provide a currency to which the supply can expand and contract in order to stabilize and to maintain a stable value relative to an official currency. Again, it might be better to have a currency related to a particular homogeneous jurisdiction and not tie the supply directly to the consumer price index or so. This might be preferable. We can discuss this. And I think also in terms of cryptocurrencies, regarding cryptocurrencies, that they are inherently vulnerable to changes in beliefs and expectations, like other currencies. So in spite of any sophisticated protocol, there's no reason to believe that there is an equilibrium with stable prices, which will always prevail over the unstable equilibria. And also, we are not allowed to forget that central bank managed currencies have other properties that help establish their acceptability and their function as a guide to economic agents, as there are legal tender. Second, they are a means of settling taxes. This must be introduced in order to stabilize any cryptocurrency regime. And I think that central banks really benefit from several decades of price stability experience. Gold supporters always argue that the purchasing power of the dollar or so is only 4% as compared to 100 years ago. But if you look at the inflation rates implied, more or less 3%, this is not dramatic. So the performance is not as bad. So what would be the approaches to regulation? And then I conclude my first intervention. I think that cryptocurrencies could serve as a vehicle to protect assets against theft or repressive confiscation. So they increase systemic competition and eventually financial stability as well. This I would admit. But I'm not an expert on that. Current technology is still a limiting factor. So we could speak here of a system of last resort instead of a lender of last resort, where cryptocurrencies work as a fallback option, and they should stay in competition with the other currencies. Regulation should also be careful to account for diversity and the evolution in rapidly changing environments, which we saw here at the conference, and not unnecessarily restrain wealth creation by this kind of competitive process. I think also that increasing transparency and investor awareness should be a priority. And also some trading practices, which were discussed by Rubini and others. They have been banned in the traditional financial system. They are alive on crypto exchanges, as I understood. So we should look at institutional actors before they enter the market. This is what Rubini also argued. Yeah, and we need that banks account for the risks associated with the exposure to cryptocurrencies. There are interrelations between both systems, and there is no reason to assume that the fractional banking system will disappear after cryptocurrencies or digital currencies dominate. So I think the multiplier effect, this was also asked in the questions, would become larger even to that extent, and we have to regulate this. And finally, I think I'm coming from a country, by the way, where we have a very strict banking act, and this banking act, the German Financial Services Supervisory Authority, the BaFin, does not classify Bitcoin as money. This is different, for instance, in Austria or the Czech Republic. And if I look at other price-stable cryptocurrencies with an algorithmic central bank, these are refuted by Eichengreen and others on specific reasons. For instance, if you have platforms which have to grow in order to function, so doubts about the future would undermine stability now. And this is well known from the literature on speculative attacks. So I conclude here. Thank you.
Yeah, I would like to continue the dialogue. And I am somehow more pessimistic about the prospect of a stable global cryptocurrency managed somehow by a global central bank. So let me presume that there'll be such a moment that a cryptocurrency will be globalized and will have a weight which will be significant enough to make it an intriguing question. So I'd like to argue that there are fundamental differences between stabilizing a national currency versus stabilizing such a crypto global currency. If you're looking at the way that stable national currencies are managed today, inflation targeting is the way that seems to work. But this is not automatic. This is assuming that the central bank is independent and is managed in a competent way. So if you wish, the central bank is the owner of the currency, in the sense that this is the charter of the governor, and he is responsible for this, and the independence is supposed to give him enough tools. And we know that it seemed to work. Now, the cryptocurrency, along the line that we are thinking, will suffer from what sometimes we call the tragedy of the commons. And the reason is that by definition, a decentralized currency is not owned by anybody, if this is the vision of something like cryptocurrency. It's collectively owned by an amorphic collection of all the potential users. Now, this led to the question, how to control the supply? Who is controlling this? And to what degree there is a way to manage the supply to match the demand. Now, because there is no clear owner, so it's not clear who will do it. Now, then if you are looking more fundamentally at the possibility that maybe the market will do it. So we know in the past history of the US, before the formation of the Fed, there was a time that there was a reason to worry about financial instability. And then among the largest banks, or the larger bank, decided to function as the one that will deliver greater stability. Now, because of the nature of cryptocurrency, we don't have the ability to identify who is the party that will have vested interest. And furthermore, if such a party is a big unknown party that has market clout, that party may not have the incentives of the large private bank in the US that intervene in stabilizing the environment, because in fact, such a party may benefit from using its market clout to manipulate the market. And we know that there are ways, if you have market clout, and especially if you can coordinate your market clout with maybe other whales, i.e. agents that have large positions, there is a way to benefit privately from manipulating the pricing. So if you wish, the stability of a currency is a public good. And that's the reason why I believe over time, evolutionary forces and political forces led us to the convergence to national currencies that by now are following mostly inflation targeting. And I would say in 80% of the countries that are doing it, they are delivering the desired stability. Now, in the case of the vision of globalized cryptocurrency, we don't have any clear-cut ownership. The insiders that are called by now whales, and I understand that 40% of the global supply is controlled by several hundreds, it's not clear who they are. And if I'm one of them, I don't think that I'll act as the agent of stabilizing it. Unlike the example in the US, that the largest bank, everybody knew the position of the largest bank, and the largest bank had the responsibility of doing it. So this leads me to the speculation that there is no escape from this tragedy of the commons, and if and when there will be something like globalized cryptocurrency, there must be a way to think about not asking the market to do it, the market is not going to do it. Now, if you are looking at any vision of centralized global currency, now it's very hard to think about anything that accomplishes this. The IMF has this SDR currency, which is synthetic currency. It's a non-starter because no transactions really are executed. And even at the level of the IMF, we know that coordinating among the three big blocs, i.e. the US, the emerging Eurozone, the EU, and China, is very hard, almost impossible mission. So again, even in the context of national currencies, coordination of global stability is something that is an open to challenges. If you recall, the Bretton Woods system attempted to, from the get-go, to generate some coordination to minimize exposure to runaway current account surpluses or deficits, and it didn't work out, despite some ideas of Mr. Keynes that was there. So the bottom line, I am skeptical due to two fundamental reasons. First, I doubt if the nation state will tolerate the arrival of the moment where a cryptocurrency will challenge the national currencies. Like it or not, the state has the apparatus of preventing it. Now, even if we are reaching this point, the tragedy of the commons suggests to me that without thinking about a different layer of currency, which will be not cryptocurrency, but will be transparent enough such that the ownership of the big parties that will play the role will be clear, I don't see why the market will do it. In the same way that the market is not stabilizing the stock valuation of IBM, why the insiders that are the big owners of the stock of IBM should stabilize it. The answer is they are not doing it. Why should they do it for crypto? I don't see a simple resolution for this.
Excuse me, may I introduce one question? Because I'm missing something.
Yes.
As a democratic single person, why should I trust your all your money systems and banking system? And where is my right as a person who have worked for these assets that you take me the opportunity with your opinions and your position to decide it myself where I would like to put and park my asset and my values in it? I'm thinking you're on a very high level talking about, but missing the people of this globe and their interest as well. And please maybe discuss it.
Okay, do I have the time to answer? Yeah. You see, the issue is not what is my private view or your private view, because nobody is asking me what is my view about cryptocurrency or about the dollar. Okay, I'm doing research on these issues. So I'm not telling you my views. I'm telling you the outcome of, I think, credible research that is telling me that you should look for a market mechanism that will deliver it. Now, I don't know what is the meaning of the global citizen that we heard about it. I'm not a global citizen. I don't think that you are. I'm a citizen of, by luck, a country or countries that gave me citizenship. Now, my ability to do what I'm doing is anchored not by my views, by the nature of the system that I'm stuck in. Had I been in China, the Chinese authorities will not ask my views. So I am unable to answer you why we are living in such a universe, but the point is the nation state is one of the organizations that seem to be scalable in the sense that they are living in 3 blocks that are approaching big scale. Each block is 20% of the global economy. Now, I understand the wish to have a cryptocurrency. And my answer is not because I believe that it's right or wrong. I believe that a successful cryptocurrency that will challenge these 3 blocks with a lag will deliver the private destruction of its capacities by the 3 blocks. Now, I made a point earlier. I don't appreciate what is happening in China. But nobody in China is asking my views and not your views and not the views of the Chinese authorities. Living in the US, I can tell you the following. A successful cryptocurrency will reduce the capacity of the central bank to conduct monetary policy, and it will reduce the capacity of the fiscal authorities to conduct fiscal policies, because most of us will pay much less taxes because we don't have the incentive to report honestly. Now, I don't envision that any functioning state will tolerate such an assault on its capacities to tax. And my view is that if in Europe we are paying, say, 25% and more of our income to the authorities, we expect them to guarantee financial stability. And if there is a run on the banking system, they will intervene. Like it or not, I don't see the end of the nation state, not because I like it or not, that's life. So this leads me to raise the question, do we have any trajectory that will imply that in the 3 blocks, there'll be convergence to global cryptocurrency? I'm skeptical. And my answer to this is the state is scalable in the sense that, at least in the US, the state is commanding super large computers. IBM is coming out with quantum computers. IBM is not too far away from the state. We talked about the internet. The internet was the outcome of ARPANET and some evolution that started at the Pentagon. If China or the US would like to kill the crypto system, I believe that within a year or 2 can be done. It's not because I'm supporting this or not. It's irrelevant. So in the absence of any vision of seeing the end of the nation state, and notice that it's scalable, because 60% of the global economy is controlled by 3 bodies. The EU, with the euro, is still a collection of states, but in terms of dealing with the crypto threat or not, we have the ECB, we have one central bank. So this is a long answer to make it the point. It's not my view and not your view, not because you are wrong or I'm wrong. The nation state is the potent, like it or not.
So I'm happy to also follow up a bit. Just to introduce myself, my name is Ariel Zetlin-Jones. I'm a professor of economics at the Tepper School of Business at Carnegie Mellon University. My research as an academic is mostly in understanding how financial markets work. Fintech, especially blockchain, is a great example of new innovations in financial markets because it merges technology with economics and economic incentives. And so perhaps an answer to your question that's slightly different is, imagine this panel were described as how would you develop the best possible cryptocurrency? And then if you want to take that advice and run with it and try to implement it, I say go ahead. And maybe our research can shed some light on that. I would step back and phrase the question, and I'm closer to Stephen's perspective on this. There's a real challenge with cryptocurrencies. So instead of thinking of designing a pure currency, we step back and ask, how can we design a useful distributed ledger? How do we design a useful blockchain? And because that ledger is maintained and has to be agreed upon by a decentralized network of users, we have to incentivize consensus and maintenance of that ledger. And that's where economic incentives plays a key role. And this isn't new, right? This is all forms of money emerge as a form of economic incentives to bridge gaps in trust. It's just a new technology for obtaining trust where it previously didn't exist. And so the take I want to ask is, one way we could ask this question is, what is the best way to design a protocol to provide the most efficient incentives for consensus and maintenance on a distributed ledger? Bitcoin pursued one approach, which is we're going to use these tokens, and the designer decided to have them issued in a fixed supply. Now, one of the challenges with the consensus ledger is the same consensus that agrees on the information on the ledger determines agreement on the protocols underlying that ledger. So it's actually very hard to change the underlying protocols. So as a designer of a new blockchain, you might ask, if I get to design it and release it to the wild, I shouldn't really expect those rules to change all that much. So I take the challenge of Valentin's question here to be, what are the right rules to establish for a new blockchain that could be more viable, that could be a global cryptocurrency for the world that serves as this payment mechanism, okay? That's efficient. It's efficient in the sense that it provides a stable means of payment, okay? We know its real value in terms of goods and services, and it provides the right incentives for maintenance of this ledger. This is the dual challenge you have to resolve here, okay? And I think for that, honestly, we need more experts in computer science, more experts in cryptography, more experts in economics who understand the incentive problems that are at work in doing blockchain design. And before we can ask, how do we design a smart contract? How do we optimally provision for the release of new tokens? I think we need to know what is the real value in the underlying protocols. Because a lot of protocol design choices impact the economic security associated with tokens, okay? Protocol design choices impact the value of a 51% attack, if you will. Okay, my analogy is the protocols are like the walls of a safe. And I don't think we really know how thick the walls of Bitcoin's protocol safe are. But we know as the value in the safe is growing, as the value of Bitcoin transactions grow, the incentives of people to try to break into that safe are going to grow as well. So I think what a lot of academics are trying to do is understand, and we're a bit behind in the game, as academics are wont to be relative to all of you industry folks. But we're trying to start with something that's well understood, say proof of work, and better understand what's the thickness of the wall of the safe provided by proof of work, and how do we improve upon that? And then we'll try to keep up with you on all of your new distributed ledger consensus protocol mechanisms to figure that out, okay? And the last point I want to make about, there was this view that Joshua provided that says, I don't think central banks will cede control of their currency to emerging cryptocurrencies. You might take a very different perspective. We have a history of central banks ceding control of their money supply, using currency boards, exchange rate pegs, and adopting monetary policy of other countries. So I think it's likely we could see currencies, and not just in a PR way, saying I'm adopting a cryptocurrency, but countries actually turning to cryptocurrencies to issue rules of their monetary policy to take control of monetary policy out of their hands. So as benevolent as we think of governments as economists all the time, we might think they face their own problems. The key one academics have really studied is limited commitment. Governments have a hard time committing to a long-term path of monetary policy. They have very strong incentives to re-optimize after the fact and take advantage of what people have done. But if I issue my monetary policy on a blockchain, the rules of my monetary policy are now governed by the users of my blockchain. Okay, it's feasible for me to design that algorithm in a way where I don't have a lever to start changing the policy after the fact. And to the extent that buys commitment, that could be quite valuable. One might argue, and I have in some of my ongoing research, that this commitment could be a key role in implementing stable coins. So in the sense of designing an efficient cryptocurrency that's pegged to some other reserve asset. Doing so requires a very complicated path of exchange rates, and how you would commit to do that could be quite a challenge. But if I can announce, create, and code this as a smart contract, then I can implement that in a straightforward fashion on blockchain. So I think there's a lot of promise for governments, existing governments, to use this to resolve commitment frictions.
Hello, my name is Linda Schilling. I work as an assistant professor at École Polytechnique in Paris. And I would like to introduce you a little bit to my work with my co-author Harold Rudick in Chicago, because I think what we've been working on is really at the core of what's been going on here. So what we did is we looked at cryptocurrency pricing under competition to other fiat money, such for instance the dollar or the euro, in a macro context. So the idea is you have a cryptocurrency, which I just for simplification will call Bitcoin, and this cryptocurrency competes for usage with, let's call it the dollar, okay? So what I mean is that people can decide on their own whether they want to purchase using dollars or Bitcoins, and producers of goods can decide whether they want to sell using Bitcoins or dollars, okay? So the one key aspect in the setting is that there is a central bank which controls the dollar price level through the dollar supply, but has no control over the Bitcoin price evolution, okay? And so the question that we've been addressing in this setting is, what can we say about the crypto price evolution, given that crypto prices will have to change in a way such that the demand for goods is equal to the supply, okay? And I think that's an important question because, you know, from the perspective of a central bank, cryptocurrencies are like, they're entering the money market. So central banks used to be the monopoly for providing money in the economy. And one of the main targets of central banks is to ensure a certain price level for instance, the dollar, okay? So that we can today buy as much milk as we could buy like 2 weeks from now with the same quantity of dollars. Very simplified. And this is achieved through controlling the dollar supply. And central banks did quite a good job in the past, but the theory that I've been using is based on the assumption that central banks are monopolists in providing the money supply, and at the same time they are seeing now transactions happening at the blockchain. So there's huge economic activity, huge demand for cryptocurrencies, employing cryptocurrencies to purchase something, okay? Which means from the perspective of a central bank that there's demand for a currency which is not the currency that they themselves supply, okay? So there is a provider of currency or provision of currency which they themselves do not satisfy. This means in response that central banks right now have an awareness that they do not control the entire money supply, meaning that potentially they cannot ensure the dollar price level the way as they used to, okay? And this is exactly where our theory comes in. So what we basically predict, it's a theory model. It still needs to be taken to the data, but what the model says is that we can, or the central bank will still be able to control the dollar price level through the dollar supply, but it will be much more complicated because the central bank will need to adapt the dollar supply to the currency supply and to currency prices, okay, cryptocurrency prices. And now that's good and bad news at the same time, because it's bad news because they constantly have to be looking, what's the crypto supply, what are the crypto prices, and so on. But the good news is that we can perfectly see the crypto supply evolving through time. It's previsible. Okay, we see the block rewards, and we can also observe prices. So this means, from a central bank perspective, basically, the question, can central banks still control the dollar price level through the dollar supply, is answered. The answer is yes. And the question is, will it stop there? So remember, central banks are used to be monopolists, and now there's entry into the market of crypto, of currencies as a whole. So someone who used to have a monopoly always has an incentive to defend the monopoly position. And this is where I'm exactly also with Lawrence, right? So the idea is, there's competition for currency right now going on. Central banks had the monopoly. They have an incentive to defend this position. And yeah, what I want to say is that, you know, it is true that from a monetary perspective, Bitcoin has no value, but the dollar doesn't have value either, right? So that's fiat money. That's how we define it. And from a monetary perspective, as a monetary theorist, and that's always the question: does money have value at all? Okay, and so how should monetary policy look like? It's establishing trust, and apparently right now, trust, like price stability alone, doesn't seem to be the same as trust, right? That's what I want to say. I will finish here.
Thank you.
If I might give a small, more technical perspective.
Sure.
Cryptocurrency, if anything, has to deal with code, with programming, with information flow. And there have been developments over the past several decades that are basic, but haven't really transferred over. When there are parties that do not speak with each other, parties that do not talk to each other, parties that do not trust each other, really. Programs on computers run through application programming interfaces, APIs. So you can have defined entry points, defined exit points. You poke an API one way, you know you'll get a predictable response. I think that looking to cryptocurrencies to satisfy certain conditions of central banks, when it's not clear what the API is of the central bank, is a fool's errand. And how is it realistic to get the central banks to make a well-defined standard of a cryptocurrency that does X, Y, Z will have this response from us? And then the people who want to have the relationship with the central bank have that interaction, to have that ability to move money in and out, and have that relationship with the central bank, make a cryptocurrency to satisfy it. Because right now, as I understand it, central banks aren't giving guidance to the cryptocurrencies so that people who are designing these things can have a reliable response to banks and say, okay, well, this cryptocurrency is going to be legal in 34 states because we know what the APIs are, and we're going to design it that way. I think that a lot of the burden of governments, a lot of the burden of these institutions like central banks, they're trying to put it on the innovator side, whereas it may be more proper to say, well, you've done some nice, interesting experiments here. If you want to play with me, just here's what you have to do. Is anybody doing that? And is it realistic to expect that?
I can provide tentative answer. I believe that the long-run survival of cryptocurrency is conditional on having such a dialogue. I think it's possible to do it, but then you should understand the challenge facing the state. Now, you emphasize the monopoly power of the central bank. It's really linked to the monopoly power of the state. Because look at the US. The FDIC is supposed to bail out banks. But the FDIC is not the branch really of the central bank. It's really the branch of the treasury. Because if you look at the end, the full fate of the FDIC belongs to the treasury, such that if the need will rise, the treasury will support the FDIC. So here there is the issue of the ownership. And the nation state will say in such a dialogue, if there is financial instability propagated by the cryptocurrency market, the state will be the agent, and I'm referring to the Eurozone and the US and China. The state, the treasury is the agent that will participate in potential bailout. Who is participating in this? So this is part of the problem of the ownership. Presently, the evolution of the cryptocurrency was spontaneous without any attempt of anybody to coordinate with the state, because this was the logic of decentralization. But here, the point that I'm making is this logic is clashing the interests of the state, not only because as a monopoly having power, because we are not talking now about Argentina or Venezuela, we are talking about quasi-democratic systems like the US and the EU, where if there is a financial crisis like the Great Depression, we know who will bail out. Now, if the crisis will be contributed by the cryptocurrency dynamics, we need to know what will be the haircut of the contribution of whoever that is there to the bailout. And there is no dialogue about this, implying that before having this, I'm skeptical about the scalability of cryptocurrency because of all these issues. So I agree with you that we need more dialogue, and I'm happy that in the Bank of Canada and other central banks, people are thinking about this. But it will take a long time to reach a consensus and a solutionary.
I think that to clarify, I'm not talking about a dialogue. I'm talking about laying out an API is not an active dialogue. It's a unilateral act. You don't have to wait to get 3,000 cryptocurrencies for free. You just say, this is what you need to do to get me to do X.
But who is me? Are we talking about all the central banks? No, but we are talking about three global central banks.
Treasury Department, all of the necessary players who are institutional, if they have a clear message and they say, if you want me to recognize you as money, this is what you need to do. If you want me to recognize you for unit of account, this is what you need to do. And lay out your position. You don't have to get the herd of cats that is crypto into one direction. That's not going to happen. You just have to say what you believe in, but you're not. The banks aren't, the national governments aren't, and it drives people who are like me, who are trying to be a bridge between the Wild West and the more regulated environment. It's a huge challenge.
I agree, but I'm not sure if the dialogue, when it will start, will be, and it started in China. They tell you, we don't believe in cryptocurrency, which is not allowing us to identify the agent. So you heard the dialogue from China. Time will tell what will be the reply from the EU, from the Eurozone and the US.
I don't think.
China is, you're taking China and comparing it with the democracy. If you are living in a democracy, democratic rights, and this also the rights of the people are important. We defend it. You are going for this and say you want to have it worldwide. So it's not depending what China as a non-democratic country is doing. It's more about what you are doing for the people in your democracy and what you want to, what they want, and what their aims. And you cannot sit there and say we decide about anything. You should also listen to the people and what their concerns.
I agree fully. Start a party of the cryptocurrency and try to push it through the democratic system. So there's nothing that prevents you. I think about my dear leader. I'm doubtful how he will react, but it's up to you. The problem is that the democratic system is not voting on crypto. Typically, we have 2 or 3 parties that are bundling everything together. To my knowledge, it's not because I like it or not, we don't have any party that I know that has significant clout that is representing the interest of the crypto sector. So you may argue that you don't like the democratic system in Europe.
Switzerland
my answer is, you're right, but let us agree that Switzerland is not the global citizen. Because chances are that if I apply for citizenship in Switzerland, I'm not going to get it. Now, we heard about the notion of virtual citizenship. It's irrelevant. What you are saying may be correct for Switzerland. Go ahead with this. If you try to do it in the US, the odds of success, in my view, is close to zero. In the EU, Eurozone, close to zero. So good for you. You are living in a country that your view, according to what you are saying, counts. That's fine. Now, the open question is, can you force China, the EU, and the US to accept your views? And the answer is no. Not because I like it or not.
Can I just come back to the original question for a couple of minutes? So I think it's a good question. I guess I would turn it around and rather than saying, you know, sort of what do central banks want from cryptocurrencies or cryptocurrency creators in order to be sort of granted legitimacy, which I think was sort of what your question was. So I think that, so first of all, I think that when the G20 has come out and said, you know, these cryptocurrencies in their current form are not money, they do not fulfill the requirements of money, and that's why we're going to refer to them as crypto assets rather than cryptocurrencies. I mean, I don't interpret that as a bias or sort of a pejorative statement. Rather, I think it's just a description of what we're actually observing. And what we're actually observing is that when you look at the role of money as a means of payment and as a stable store of value, you cannot associate those two things with cryptocurrencies. Very few vendors accept Bitcoin relative to more traditional forms of payment. We've talked about price volatility as being sufficiently prevalent that you can't really think about it. It's more of a speculative asset at this point rather than a stable store of value, and it's not a unit of account. People don't think about the price of something in Bitcoin. They think about it in their sovereign currency and then do the conversion. So I would turn it around and say, when cryptocurrencies solve these issues, when cryptocurrencies actually gain ubiquity in terms of being accepted as a common means of payment for online purchases, for in-store purchases and things like that, then I think they will be regulated more as money, as opposed to the way they're being regulated right now, which is a little bit more like securities.
Just to clarify, when I'm saying to create an API, it's not just cryptocurrencies, because other innovations that perhaps haven't even been conceived yet, once you have an API, once you have a set of rules, that this is what you need to be stable, this is the highest level of volatility, you have one objective standard, and it's highly important to have one standard because honestly, there may be cryptocurrencies that are better than the Bolivar. There may be cryptocurrencies that are better than Zimbabwe's national currency. And when the objective qualifications are better than some of the national currencies, and there is still a mismatch between the acceptance of those national currencies and those cryptocurrencies, that's when I foresee more trouble than.
Yeah, so you're looking for a quantitative definition, like actual numerical thresholds.
Because you have act on them. You may not say them, but you have a revealed preference. You probably don't take both of our deposits. Probably not going to happen next year. However, if things play out in a certain way and things get better over there, you may change your mind. You don't say what's going to cause you to change your mind. And it would be really helpful if you started. And that's for national currencies and that's for crypto as well. And having a fair single standard would be an extraordinarily positive thing.
Can I so if you
Yeah. I think, I understand your position. I understand your wish. It makes a lot of sense from the point of view of somebody that wants to develop a cryptocurrency and things like that, and to do the direction of general acceptability as a means of payment. However, when you say to central bankers, you say, you give us an API, you talk as if all the central banks in the world are coordinated with respect to that. But it's an individual. Each central bank may have a different view about that. Okay. So there is the view of the Bank of Canada, there is the view of the Fed, there is the view of the ECB, there is the view of the Bank of England, and there is the view of the Bank of Venezuela. And the Bank of Venezuela really is not the Bank of Venezuela; it's really the government, and the Bolivar and all that. They may have different views. Now, this brings me to the second thing. Why is it, do you think, that the only option to achieve stability in those countries that have unstable currencies, like Venezuela today, like Bolivia, the Bolivar and all that, is only through a cryptocurrency? Yeah, no, but I mean, this was the insinuation because, yeah, okay, I know, maybe you didn't mean it. Yes. Okay.
And I know that because I was there.
Uh-huh.
And I can tell you that it's strange that in a country like Venezuela, people mix in US dollar or in Bitcoin and not in Bolivar because you don't make like.
But when fine, but let me ask you a question. In Venezuela, do you know if they prefer to accumulate their savings in bitcoins or in US dollars?
Actually, in both, the problem with dollars is that they don't, it's with this high level of criminality, when you have $1,000 at home, it's quite easy to get robbed. But if you have $1,000 in Bitcoin in your private key, it's less, it's safer.
Okay, but this could be achieved, and this is something that is related to what something to Rubini said during his talk, but maybe was sort of neglected among all these. Let me just finish.
Part of the pension in Venezuela is paid in crypto, the national cryptocurrency. They are not happy about that, but because crypto is a joke, Bitcoin is not a joke.
No, but you see, but another way to achieve this kind of stability and immunity against crime of holding dollars is to have individuals have access to dollar deposits through their iPhones. In other words, and and then so if they, if they're allowed to have dollar deposits, if they're not allowed to have dollar deposit.
You do realize that holding Federal Reserve notes is a crime. Yeah, that
Okay.
is the point. Like even to take some dollars, you go to the
Mhm.
border with Brazil and then actually smuggle the money.
Okay, but if this is a crime, the government of Venezuela makes it a crime to hold dollars. Tomorrow, when you start to use bitcoins and the government is not satisfied with that, they are going to decree that using bitcoins is also a crime.
It is a crime. It's just easier to hide.
It's easier to hide, okay. But
We're leaving the area of economics and into the area of political revolution.
Yeah,
These are acts of rebellion.
Yeah, okay, sure, okay. But then the question is whether when we are talking about devising a system for the world, and my impression was that this is what you were talking about. Let me just finish. Let me just finish the point that that we're talking about countries that are reasonably stable. Now, countries in which there are revolutions, in which people are killed, in which there are civil wars, in which there are, like Syria, there are, 500,000 dead because of the civil war, another million wounded, and about 3 million refugees that are running all around the globe trying to get into those. I don't think that, that the problem is not going to be solved by Bitcoin. The problem resides somewhere completely different, and we know where it resides. So this is really, saying the citizens of the world and all that is very nice for zoology, but what?
So can I?
2013, the United States engaged in a failure mode. The Obama administration started Operation Choke Point and took legal businesses that are completely authorized by U.S. law and tried to shut them out of the banking system. It didn't stop until the Trump administration said, "This is crazy. Don't do that."
Can I just?
What kind of businesses?
Also, the banks want to take away the cash money. They want to take the cash money away and the full control of it. And for me as a citizen, it's important then to have a currency where I can believe in, which I have also the possibility to do cash payments like the Swiss franc. And they are also going for this. So cryptocurrencies have also in the first world a lot of means, which also say we are not happy anymore with the existing banking system and their dominant dictatorship in financial markets. So stability is always the old grandma we put in the front of the line. But please take in consideration if the banking system, the existing one, would do their job, then maybe cryptocurrencies would not have this impact in the future.
Yes, but Kulok, how do you change the existing banking system? This is through changing the government. Now, how do you change the government? Through the voter. You have to convince.
If I vote in Europe, the European Parliament has nothing to do with the European Commission, and the European Commission and the European Bank is a separate issue, like the fact in US as well. We have only here in Switzerland and in smaller countries where democracy has a value on the central point that you have really an impact and that there are the changes here. And this is the topic which is also behind all this topic. So if we want to go for peace, freedom, and a stable and freedom world, we cannot continue with a system like this. And we need alternatives where people can decide who they are trusted, who they.
Okay. So hold on. Let me just say two things on this. One, to your point, no one on this panel is going to disagree with you that regulatory uncertainty can depress investment and innovation. Okay, you're absolutely right. I think though you're putting a bit of an unfair burden on how we regulate. I shouldn't say we. I am not a central banker. The panel was not central bankers for crypto. It was what would a central bank for crypto look like. But I do say, like, look at banking code. Banks also face severe amount of regulatory uncertainty. Look at tax code. Like, there's a huge amount of regulatory uncertainty in the U.S. system, at least everywhere. It's not clear there's that much more regulatory uncertainty for new innovations in blockchain versus any other industry. When there are 8 different capital liquidity requirements banks have to satisfy, that alone seems silly. Okay, so I'm with you. I agree some certainty would be helpful, but it might be a bit of an unfair burden. There's somewhere in the middle. On the other point, I think it's important to also recognize that one of the reasons certainly bankers will tell you why is there this emergence of cryptocurrency, it's because of what the Fed has been doing with policy. It's because of what banking regulations have done to hamper what banks can do. That the reason we're seeing high prices, the reason they're passing on regulatory costs at typical consumers. So in some sense, what the existing central banks are doing may be playing a role in why we're seeing such demand for innovation outside the traditional financial space. You're talking as if all the central banks are doing is cramping down on this innovation. But the same way we saw central banks maybe spur the shadow banking innovation, perhaps what we've been seeing over the last 7 years is central banks spurring a new type of innovation in blockchain for financial services. So, it's a bit of a double-edged sword in how you're perceiving this. You see it all as negative for blockchain, but it might actually be providing or sowing the seeds for demand for these innovations.
I had placed that construction of APIs because there's a multi-decade history of getting people who don't necessarily even like each other to collaborate, even though they're competing cat and dog financially in terms of market share. Apple has an operating system, Microsoft has an operating suite. They still manage to make Microsoft Office run on the Mac OS system because there were well-defined APIs, and Microsoft could depend on a predictable response from Apple. And they do that to this day. Through thick and thin and hard times and easy times, agree, disagree, picking on each other all the while. And when APIs get violated in that Apple system, Apple would hurt you. They still do. They will change their code just to break your stuff. And they promise that. So it's not just something that is a burden on the institutions. It's sort of a promise of predictable behavior. When people behave badly, you expect to get your hand slapped and to suffer the consequences. That's what an API does. That's a multi-decade history of how APIs work. When Microsoft tried to knock Unix out of the ability to network with its machines, internationally, a group of computer scientists changed the Kerberos standard 3 times in a week until Microsoft caved in. There's dialogue that can be done, and there's long-standing history in how to have success at it, how to handle bad behaviors. And I have yet to see evidence of in the crypto world taking that as a model to try to negotiate people who don't really understand each other. They come from different worlds. And that's what I'm trying to say, that it's a complicated story. And I think there are rich lessons available. And I hope that you consider.
Thank you. Let's make a small exercise. Imagine that there are 10 million people who has the new currency on their wallets, and the currency is frozen. They have something like 1 trillion of currency, say L. Let's call this L currency. And in some African villages, there are people the farmers who need seeds, and they don't have money, but they need to kind of plant it. And their neighbors has wallets on La Token Exchange, and they say to them, well, I can give you a loan in this new currency, and there is another neighbor who can sell you seeds. And then you kind of do your work, take harvest and sell kind of your harvest in this currency, pay back my loan. So there are 4 people involved, and all of them are ready to accept this currency. And there are several villages who started to do like this. But currency is frozen. So how would you release this currency? Imagine there are hundreds of thousands of people are starting to use this currency in this way. How to manage supply for this currency so it is stable? So, and you have a power to unlock currency on their wallets. So there is a smart contract. You can tell to the smart contract, so release some part of the currency on these wallets. How would you? What would you do to bring this currency into circulation?
Yeah, I think that at least the central bank should example that you still need some kind of lender of last resort.
In the same way, I would say that recently, some currencies like the dollar or the renminbi has been used as a weapon trade recognition or political reputation as well. So don't you fear that cryptocurrency would belong to a central bank, would be used, as you said, to freeze the wallet of certain class of population of countries? It would be easier for them to control the cryptocurrency than the actual dollar trade.
This is an exercise that, to a degree, history showed us that at the end of the Second War, Europe was destroyed, and the US this time did something right in the form of Marshall Plan and other plans. So it goes back to the question, what is the political economy story behind this? Sometimes the party will do it right, sometimes not. So if you're going back through the concern of Keynes in 1919, we know that there are ways of doing it wrong, in a wrong way, or better. But at the end, the answer is related to the political configuration and also to the income redistribution aspects. If this is a currency that belongs to a certain segment, and what is the attitude of the sovereign to that segment?
So the political structure is very simple. The citizens do not ask their governments if they can use this currency or not. They just have access to internet. That's it.
I think there's an important design choice in here, though, which is, and this came up when we were discussing central bank digital currencies earlier today, of you embed the government with a lot more power, we should be worried of what they might do with it. If it's a smart contract you're designing, there's a question. Should we allow the government to choose a contract that adds or subtracts or freezes individual accounts or not? Once it's written, if it's truly decentralized and implemented by decentralized code, the government doesn't have the opportunity to change it again. Now, maybe you want the government to be able to redistribute to individuals. Maybe there are benefits of redistribution, and maybe there are costs of freezing individual accounts. So economists are going to try to value those. But at a mechanical level, technologically, our new technology allows us to write this in a way that that power is taken away from the government ex post. So even though you give individuals, if you really want to go further, cryptography is pushing us further into zero knowledge proofs, where the government doesn't even know what's in your central bank digital currency account. The tech cryptography is on its way there. So the question is, you can change the technology if you want, if you're worried about that concern. Is that the optimal thing to do? I don't know. But there are ways to get around that.
This exercise is even more simple. So you are elected board of governors, and you have case, this smart contract, multi-signature. So you make decision, sign it, and smart contract execute. And this is for a while, maybe for a year or two, and then you will have to approve your decisions with the holders of this currency. For example.
Right.
I would like to answer your question, about a simple question. In my view, this has to do. This is not a transaction that should be viewed as a transaction with money. This is really a credit, a sort of small credit allocation. A small credit allocation is something that I think we agreed, and I second Nouriel opinion that he was talking about really, we're talking about central bank digital currency, he was talking about giving the monopoly of the central bank only to about 1% of the total financial assets that have to do with the most liquid kind of thing, which is basically pure currency. Everything else, including the allocation of credit and all that, is going to remain in private hands, and no central bank has to have any rules in touching. And the kind of example that you bring here is basically falls squarely into the area of financial transactions, which are not necessarily have to do with what the exact medium of exchange is. The medium of exchange could be a cryptocurrency, a Bitcoin, or Ethereum, or a coin that has been issued by this or by that. It could be a dollar coin, or it could be just a representation of a dollar bill or something like that. You don't have to invent, a distributed ledger for that. This is, and if you want, you do that. If the private sector decides that it's more efficient and they like it, like the guy that we just walk away, please do it. The central banks are not going to intervene. You are Swiss, right?
Yes, but German origin.
Okay.
And I mean, just to that point, I mean, if you adopt something like the tokenized system that I was describing earlier, then they don't even have to give up that 1%. I mean, it's currently central banks have a monopoly over the creation of banknotes, and there are versions of central bank digital currency where nothing else really changes, except the central bank continues to have a monopoly over the creation of central bank money only. And you have to remember, the vast majority of money in an economy is not central bank money, it's private bank created money. But that share that is central bank money, it would simply go from a banknote, a paper note, to something that's more convenient as the means of payment, and therefore would remain competitive with other electronic means of payment. Because what we're seeing in a lot of countries is a decline in the demand for cash. I know it's not true everywhere, but we're seeing it in a lot of countries where the transactions demand for cash is falling. And as a result of that, central banks are asking the question, well, do we need to replace it with something? Do we need to replace it with something that's more convenient because people are substituting away from cash because you can't use it to make online purchases, you can't transmit it electronically. So I think there are states of the world where governments could end up, through the issuance of a CBDC, with significantly more information that currently private banks have about you. Private banks currently know a lot about your transactions behavior. Some of that could conceivably shift to central banks. What I'm saying is that's not the only design possibility. There are design possibilities that are much, much more sort of light touch in
This is what we really call the Philadelphia.
Yeah.
Basically, you actually mentioned that the third possibility, this was not the one that he preferred, but it is the one that I also, like you, I prefer.
And I think it gets back to the issue of what is sort of the appropriate supply rule if you were in a world with a cryptocurrency. And I mean, I think that's an interesting question. I think there are obviously parallels between what central banks have learned in time in terms of what the appropriate instrument of monetary policy should be, that carry over to cryptocurrencies. Because if you imagine a world where you have a ubiquitous cryptocurrency that is used as a means of payment, and you have financial assets that are priced in that cryptocurrency, and you have banks that are lending, taking deposits in cryptocurrency and lending, whatever the platform is, whatever the original money supply rule is that's built into that cryptocurrency, is not actually that rule is not going to control the overall supply of cryptocurrency, because you're going to get the same sort of money multiplier that you get with the creation of inside money in the current system. So I think this idea that somehow a cryptocurrency could perfectly control the outstanding quantity and therefore perfectly control the price level, history has taught us that that's actually not possible. And because you get movements, you get shifts in demand, you can't control what the money multiplier is. The money multiplier changes through time. And so what I would think would end up happening is you would have a cryptocurrency issuer that would wind up with an operating framework that was not that different than from what a current central bank uses, which is an operating range. They control the scarcity of a very, very narrow measure of money, and through that they control short-term interest rates, and that's how they achieve price stability. So there may be parallels between that and sort of the kind of money supply mechanism that you have in mind.
Okay, let's imagine there are two tools for monetary policy. One is to unfreeze frozen tokens on millions of wallets gradually, and second is to give loans, and you can tweak interest rate and also approve who can take loan, who can't.
So you want to figure out a way to get this cryptocurrency into circulation.
Yes. So, and
I mean, what do central banks do? They accept assets in return for banknotes. That's how central banks, when people talk about central banks printing money, what they don't print money and then just give it away. Their balance sheet is made up, is balanced on the asset and the liability side. When they create money, that appears as a liability on their bank sheet. There has to be an offsetting asset. So they accept assets, treasuries or whatever from private banks in exchange for the creation of banknotes. So it seems to me in your setup, you would actually have individuals coming in and saying, look, I have these 6 bushels of wheat. I want to trade that in for some cryptocurrency so that I don't have to engage in barter.
And I don't need his wheat as a pledge because
Sorry?
this central bank or this smart contract cannot control this wheat as a pledge.
Cannot control the wheat, just holds it passively. And the person could then redeem their cryptocurrency in exchange for, well, I mean, assuming it wasn't a perishable, assuming it wasn't something perishable, could then, and then you've essentially got an asset-backed cryptocurrency.
I think the question is also, should we allow, and I'm curious to hear your response, should we allow individuals to borrow if we have a central bank digital currency from the central bank?
So
not just hold reserves, but borrow reserves. Because I think that's Valentin's question, which is, though I don't have the wheat yet, I'm going to produce it. But I think that's the content of the question is, should we be allowed to have negative positions with the central bank?
Why should it?
I had a hunch what your answer was, but
No, but I think all those that are on the other side, so-called other side, including Houdini, I think, including Joshua, and all that, they believe like the rest of the audience, those kinds of activities should be left to the private sector. Whether this is done with Bitcoin cash, or Bitcoin coin, or a fiat dollar, or a fiat euro, something like that is a completely different question. But all those kinds of transactions that have to do with small loans, big loans because because you have to plant your need seeds in India and things like that. All those things, those are credit. This is financing credit. This is the business of financial institutions. Should be left to private financial institutions.
I think it's, and again, I'm speaking personally, but it's not obvious to me how central banks would have a comparative advantage in the provision of credit. So, and again, I think that this moving away from this sort of account-based system even eliminates that as a potential question.
Okay, Linda, what kind of metrics would you consider to program this smart contract for another year? So you encode the monetary policy into smart contract. What should the smart contract consider to decide how much money to print by unfreezing them or by giving loans perhaps to exchanges?
Okay, so I think I agree with Steve in that the monetary supplies should be just managed as central banks do, right, to maintain price stability. I think central banks have a lot of experience in managing the money supply and achieving price stability. So I think the effective thing to do for a smart contract would be to just copy what the central bank does, supplying money when
Yeah, I think this question is good to add to exams in universities, and I will add it for applications to this board of governors. So, all right. Thanks a lot. This was very insightful. Thank you. Woo. Now we have a reception. Let's take a small break, and there will be some keynotes. And of course, let's make a photo. Joint photo, please. And everybody, please join us. So you make photo all together with us, and then, okay, ready? Yeah, and then everybody joins us. So everybody join us for collective photos, please. Yeah, big photo. Yeah. Join us to have a joint photo. Perhaps some of the new currency will be distributed to those who are in this photo. Not sure. We will check. Yes, everyone join us. Who's making photos? I'll jump. Are everybody in the camera? Great. Are we? Do we really fit your camera? You are close. Thank you. Thank you. Thank you, Valentin. Thank you. All right. So now we will have a reception. Get acquainted and keynotes. Yes. Some unexpected stories. Hi.
I'm Sue. I just want to say thank you so much.
Thank you.
For having me here. You pulled it off. Yeah.
Thank you.
Yeah.
Thank you.
I mean, yeah. I was telling some of the Latoka guys when I first met you. So you had these big, and you pulled it off. So good.
Thank
well
you.
done.
Thank you.
Yeah.
Thank
well
you.
done.
I want to figure out how to make it visible for keynote. Because it will be loud. Okay. Sergey.
Are you? I'm working on a startup tokenization listed loans in the US on Silicon Valley. So where is your headquarters?
We have license in Estonia, Taiwan. We have
security tokens?
yes, we are doing security token offering and secondary trade.
Oh, okay. Real life?
Yes.
Which token? How many tokens are?
150.
Security tokens?
Security maybe 7.
Who should I talk to?
To get listed.
No, yeah, to get listed, yes.
But I need this. There will be keynote. Yes.
Yeah, it will be there. Here's a fundamental problem.
Okay. О, вот. Есть, можно здесь кружочек поставить, так, кулуарно, или вот туда ближе? Как больше?
я не знаю,
Лучше, можно
здесь-
так кружком.
Давайте.
Вот, ну тут микрофон громкий. 1, 2, 3. All right, so 3 to 5 more minutes to take food, and we will start keynotes. Yes, informal, unexpected stories. So take some food and prepare for stories. The first story is from Sergey Guriev, chief economist of EBRD. Good. Hungry. Good to take before it disappears. Sorry, guys. This is a good idea to make small informal stories. Or it's better to kind of.
He just started.
Already. Yeah, you can share this stuff.
No, very, very interesting.
So it's a competition of stories.
Competition.
Yeah, because some of the stories were announced.
I missed.
Do we have themes?
Next year.
Huh?
We have themes about the stories, or is it?
Yeah, it's unexpected stories which would influence us.
Started with
So,
I can tell you a good story. In Venezuela, people don't store Bitcoin or dollars; they store packages of flour and rice because food is have a better value than the money. So,
we heard that in the video.
good story. By the way, what do you think? Is it good to make story here or to move a bit here?
Move a bit here.
Why-
Yes.
why-
Move a bit there.
So we should
5
wait
minutes.
to 5 to 10 minutes and move there a bit.
Yeah, just decongest.
actually, we have.
Такой, что хотят налить вина немножко, поесть. Вот, еще минут 5-10, если.
Там, где мы в стартапы по финтеху, которые специализируются в работе. И ну, это 6 экспертов.
Отлично.
Did you eat, Valentin?
I'm trying to.
You
I
must
see
eat.
it disappearing.
I ordered
Take a big plate. Valentin, this.
Who will pay?
I mean, the plates
You have
are
to take this
Oh,
plate.
thanks.
No, the plates are
Ah.
free.
Great.
Because small plates are not available anymore.
No, I ordered plates like this.
Okay, good.
Food disappeared very fast. Yeah, I didn't make it out either.
Very hungry.
I imagine everybody was quite hungry.
Hungry for knowledge and for food. Можно пригласить через 2-3 минуты на фотографию команды тогда всех вместе? Для зрелища.
Давай.
Хорошо, пока все не разбежались, а то я потом
Отлично.
Smart lady. Yes, you are definitely. You are from Silicon Valley. That's why I'm smart.
That's great. And you have been speaking a lot, but I have not been able to introduce myself. I'm Gustavo Prieto from the University of Turin. So, in general, I'm working on how to use international law to either protect or regulate, or how international law can react to cryptocurrency. So that's my field of work. So it has been really great and really exciting to be here. So I hope that we will be in touch in the future. So thank you.
Great, nice to connect.
Yeah, I think I have already sent your connection, or I will LinkedIn, and we can be in touch.
Great.
Thanks very
By
much.
the way, we are doing security token offering and secondary trading. If you see tokenized assets or security tokens, send them to us.
Okay. Thank you.
Thank you.
Thank you for everything.
I know it's.
Sorry that I did this comment, aber hier war
So I'm thinking how to make this game. What do you think? It's a good idea to give microphone to Sergei Guriev so he can tell his unexpected story.
At the moment, it's very loud. I think you have any way in your to bring the people. Let the food is nearly finished. I hope you had got some, and then let the people calm down a moment because it was so long hours now of discussion, panel discussion. I think
so
a few minutes they need. Otherwise, it goes
Thank you,
down and nobody recognizes it.
Okay.
Before it's all over, again, thanks a lot for making part of it. I like your visionary talk. We need more people with visionary. And then keep in mind that if ever you want some scientific research done on transactions that are going on in your network, do reach out. I might be instrumental. I've done this in the past. That I looked at data and tried to contribute a piece of evidence to the debate because there's so much talk and there's so little analysis.
So what kind of analysis would you like to do?
It's essentially, I'm just starting to think about participation. So if more people participate in the network, does the price become more stable? Things like that. So I have a feeling that if it's a thin market, it's actually just extrapolate traditional securities trading. If it's a thin market, prices can bounce around a lot. But the moment you have more breadth of participation, there should be stability. It might still be volatile, but it's an order of magnitude less volatile with wider participation. Things like that, And ultimately, those are empirical questions. We can actually do some analysis. But for us, to do it, we need the data and of course, confidentiality arrangements that have done in the past. We must keep it in the back of your mind.
Yeah. So I will make a follow-up email with some thoughts how we can cooperate here.
Yeah.
Please respond, and there will be some work and some discussions. That will be great fun, actually.
Yeah. So, and I can provide you references with people that didn't deal with me in the past, and that you can trust people not keeping data confidential, and you can mask identities. Of course, you'll do that. I'm in it for the scientific work, so anything else, I'm not so interested in.
Right.
Thanks a lot.
Yeah.
Yes.
Keep contact. Смотри, вот поговорили сейчас. Носитель серебряной напилы, вот там женщина. Вот она, вот там. А я тебя давай познакомлю. Roman is working on strategy and investments. Discuss views on the potential
You've been on my mind ever since the flood. Heaven help a fool who falls in love. Got a little paycheck to got big plan. You So you come a long way, but you never have me. Never have for a normal life. Yes, I'm so busy earning, I can't get enough. So busy earning, I can't get but I bet it won't change no more. That's a boring life. It's you can't get it. Just busy earning. You can't get enough. All your time so busy earning. You can't get enough. Just busy earning. You can't get enough. So busy earning. You can't get enough. All your time with you. So busy earning. You can't get enough. Just busy earning. You can't get enough. No. Just busy earning. You can't get enough.
There is nothing better than democracy. However, what's happening right now today? People selecting someone who should be they represented
Say yeah, how I'm feeling. Ain't easy, you know, time and time again. Time and time again. Say it again. Just hold on tight, don't let it in. Yeah, I wanna, don't let it. Just let it out. Time and time and time and time and time again. Time and time and time and time and time again. Break it, now I'm feeling. You see that? I know, you know. Time and time again. Time and time again.
All right. So are we ready for some unexpected stories from our guests? Yes? Okay.
Yeah.
Yeah, some unexpected stories, interdisciplinary. Oh, come back to my microphone. So the first story is from Sergey Guriev, chief economist of EBRD. Yeah. So let's try to form some kind of round discussion. So come closer. Yeah, so good. It's good. Please make a kind of round. Okay. Sergey, what is the topic of the story?
So I'll talk about populism. I'm as a researcher, I do research on populism, on modern populism. Nobody can hear me. So it's, yeah. Okay.
Guys, make a bit of less noise because we are talking here about populism.